Hello and welcome to Macro Matters. This is our bi-weekly conversation about the macro events that matter for our members in the finance industry. Today is December 15, and I am again joined by Rich Excell and Tony Zhang, both of Geese College of Business at University of Illinois. Welcome, guys.
Yeah, thank you. Thanks for having us.
And today I thought we would discuss alternative data. This is something that often comes up in our conversations. This is something I know Tony is looking and works with a lot. So really nice application here on the current COVID environment that we're in and macro matters generally. And so for our members who might think of alternative data as something that you apply primarily on specific companies, we want to, of course, answer the question today and give some more color on when it comes to alternative data applied on macro questions and macro trends and all of that. It's coming strong. More and more people are doing it. You're hearing a lot about nowcasting and things like that. So the question is, why does this matter for a person who may not be doing macro as their main focus in their profession, right? So whenever you talk, let's do hit on that. But maybe I should start by actually asking Tony, when we talk about alternative data, what are we talking about here? Could anything be alternative data as long as we slap on that label on it?
Yes, thank you, Lotta. As what we have discussed, that alternative data has become a buzzword in investment community for quite a long time. Indeed, alternative data is transforming the financial industry in a broader way in insurance, cloud funding, investment management process. And actually most asset managers, including the hedge fund manager, mutual fund, even pension fund, endowment fund, they actually have started to realize the importance or the functionality of the alternative data, which has become a driving force behind not only the digital transformation for the industry, but also the digital transformation for the financial industry as well. That to a certain extent, investment managers that do not actually follow the utilization of alternative data has found extremely challenging, especially since the start of COVID last year. That alternative data, by definition itself, is different from the traditional financial data that fundamental investors are looking at, such as the financial statements and also other maybe market internal data, such as price and volume. And alternative data has a variety of categories, including the textual data, imaging data, voice data, video data, and other IoT of data. This is cover a wide range of data sets. Probably we can discuss in a slightly deeper into each one individual category for quite a long time. But this is a high level of description of alternative data. Since the start of a pandemic last year, that what we have seen is that this macro data has become extremely important in making the investment decision or almost helping the investment manager to identify the trend from a micro level. Because a lot of financial statement data will not be available until maybe 3 months later, right? Now, the alternative data, on the other hand, will provide an alternative or insights for financial professionals to look into how actually things start to change from intraday basis. So that's the powerfulness of the alternative data. So that's high level definition.
One extra question about that though, is alternative data best defined as the source it's coming from in terms of something that either comes from the government or is being on the regulatory basis has to be produced by, such as public companies, or is it about that source, or is it about how many people are actually using it, such that if you are thinking that something is alternative data today, when it becomes more popular, more people want to use it, it's not going to be alternative anymore.
Yeah, actually, Lotta, you are talking about a very good question. Because just actually indeed know a clear definition for what alternative data is. However, when we are really referring to alternative data, people are referring to the data provided from mainly three sources. One is from individual. The second is from the business. The third is from the public entity, such as the government that you just mentioned. For instance, when we talk about the individual data, like social media and your digital footprint, how you actually utilize your cell phone and how you actually browse the internet and how you actually maybe make certain kind of visiting to a certain place, your GPS data, those are your individual data, which are actually tied to consumer by themselves, right? Those data are very, very important. You can imagine tied to certain category of business. For instance, when we're talking about the transaction data, like points of sales data, POS data, if people can understand the importance or the nature of the POS data, they could realize whether people are actually saving or are actually spending, right? So if we aggregate all of the individuals kind of data together, that can actually provide a great insights to both financial professional and to policymakers as well, like whether we should continue to have more of stimulus so that we can drive people to spend more, or are they actually spending more? So that's one type of data called the individual data. The second category is more related to the business. When we're talking about business, we're really talking about like the public companies or private entities as well, something related to the certain business. For instance, the transportation for the transportation industry, like whether do we actually see the cars or trucks are moving, right? And are they moving in or are they moving out? So that's one type of transportation data related to the business. Second type might be related to business will be like what we get to see in the energy industry. Do we actually see the tanks are actually being shipped out, right, or shipped in? More importantly, nowadays, we talk about the supply chain. So if we can actually have certain data, image or traffic data related to the situation or supply chain, that we can actually have a much clearer picture to see where actually the supply chain is alleviated or alleviated to a certain extent, right? That's the second category of alternative data. The third category of alternative data will be the data published sometimes by the government or might be other NGO, nonprofit organizations. Like in United States, US government actually published tons of data and related to, for instance, the migration, immigration. This is very, and also the spending, saving, right? Those data are very, very important source for us to understand the macro and also micro as well. Especially now we talk about the impact of COVID to certain industry. We can actually look into the migration data actually published by the US government or US survey or census. Those data are highly useful in terms of corroborated the fundamental data provided by the public company by themselves. So those are the three great sources of alternative data for sure. And interesting things for the last portion, like the government published data, there has been quite a nice research over there that now is the usage of alternative data provided by the US governments is no more than 1%. That being said, 99% of data stay there and without even being touched. So, but from an investment management perspective, from financial professional perspective, I think that's some kind of a reserve for gold mining or even for other treasury hunter. This is a great things over there.
So a lot of people might not think about alternative data, the government data, savings, you said, for example, as alternative data, right? You think that that is kind of widely spread, but are you kind of saying there that, well, because it's not being actually used that much, we can think of it as alternative for that reason?
Yes, to certain extent, as long as the data is not directly related to the public's data for instance, the financial data about the public companies, and also the market data related to the trading that we actually treat it as alternative data. So you can think of those as one type of source, but including the tech, as long as it's not the data, it really in terms of numbers, numerical data, right? Like return on equity, or the price, or the revenue, or the growth rate of revenue. Those are the very traditional type of data. So as long as this has nothing to do with the numerical data, most of the time that we actually treat it as an alternative data, textual data, image data, voice data are all great examples of alternative data.
So if I can just add one perspective from a layman's perspective, I guess the way I think of alternative data, and I mean, Tony's laid it out for us there, is that it, you know, when we think of historically the data that we use as investment managers or investment analysts, it's anything we can kind of download from a data provider into like a CSV type file and pull into our models. But the stuff that Tony's talking about is really very, very large unstructured data sets with millions of lines and not just hundreds or thousands of lines. And so it really requires machine learning and AI and kind of big data analytics to analyze these sets of data. And so that's and it's the advancements to me in machine learning and AI that's really unlocked the potential of these alternative data sets. It's not that, you know, as Tony mentioned, investment firms have always been trying to find a differentiated set of data to give them a competitive advantage, especially, you don't want to do that illegally, of course. You want it to be, public data. But as Tony was mentioning, there's a lot of this data that's been out there that we just didn't have the skills to unlock before. And as those skills have become more readily available, especially in the investment world, we've been able to unlock that.
That's a good point. If I just think about it as a case study, during COVID here, I think one of the quintessential kind of alternative data that you hear people talk about, I know The Economist had an article about this, is the mobility data. This was Google produced it. I believe there are other mobility indices out there as well, but using phone signals from people moving around. They have various categories. This is retail, like retail and recreation is one of their categories. If you got public transport, you got parks, you have a work, like how much do people go to work? And then you have kind of the inverse of all this, which is residential. It's inverse. What I mean by that is that during COVID, you tend to see all of those that I mentioned go down, except for the residential. Although when I look at the park one, it seems to be just a function of what's the season in a lot of northern countries. And it's really, the pandemic hasn't prevented people from going out in parks that much. So that's just an overview of what I'm talking about here. And what's interesting about what you said here, Rich, is that we might not think of your definition of alternative data in terms of the unstructured part, because when it's served to us, it's very structured indeed. I can use this data very easily. I don't have to do anything AI or anything smart with it. I put it in my Excel sheet and I put out the graph there, and I look very smart. And it doesn't really look like I'm using an alternative data. But the point here, right, is that they have the algorithm. Before, they wouldn't have been able to create these data in front of us. So you have the confluence, right, of the technological ability and the impetus to do it at a time when a lot of people were trying to now cast understanding what's going on the ground in the economy.
Yeah, I completely agree. And I think that there's two things there that you highlight, that why not only does the macro matters, as we say in this podcast, but where the macro can meet the micro. And I think one of that is that companies that are coming forward, making this more accessible to those without the machine learning and AI skills, and they get a nice premium for being able to do that and serve that up in kind of a more of a graphical user interface that everyone can access to. But then it's the ability then, or the need for investment managers to pull that into their individual security analysis. And I think that's something where I know a lot of our members, a lot of people we speak to, they follow a small subset of a market. They don't follow the entire market. And so maybe don't understand or don't really appreciate how these kind of bigger and structured macro data sets can influence what they're doing. But as Tony was mentioning with like the supply chain, or what you can do in terms of seeing the videos of ships lined up off the LA and Long Beach ports, or what you can see with natural language processing and being able to scrape that across earnings call transcripts or earnings calls themselves, across the entire market, is there's information that individuals can pull into the analysis that they're doing of their own specific securities that can actually not only influence our macro decisions, but also influence our micro decisions. And so this is something where I think we've only scratched the surface of what we can do. And yes, it's certainly being applied initially to a more macro landscape and more macro forecasts, and economists are probably at the forefront, and macro investors are. But this is something I think micro investors will absolutely be utilizing more and more. I mean, as you mentioned, this is that we're in that holiday time of year, and going back 20 years, we've always had Wall Street analysts wanting to send their junior analysts out to the malls to count how many shoppers are in individual stores to try to get an edge on forecasting revenues. Well, you don't need to send your analyst out to do that anymore. You can buy the data to do that.
Yes, I think I like the comments from both of you a lot. Definitely, one of the outstanding natures of alternative data is that most of the alternative data are from not from the standard statement or reports, and are unstructured in terms of formats. Definitely require like advanced computational techniques such as the machine learning and natural language processing technique to handle those data, as what Rich and had just mentioned. Right at the beginning of pandemic, for instance, like the demand for the supercomputing power has not been dramatically in financial industry at all, but the COVID has changed this whole thing dramatically. That's why we see the demand for the machine learning guys or demand for the computer science scientists within the financial industry skyrocket dramatically since last year, right? And more interesting things, we actually have seen the companies such as BlackRock not only actually lay off the traditional financial analysts or traditional financial managers, right? They hire the computer scientists to replace those kind of hammer jobs. So this actually had become a major trend and major shift. The democracy or the advance in the machine learning and natural language processing actually has lowered the barrier for the financial professional to start it or to get access to those alternative data, and are able to extract the information from those unstructured data more easily than before. Even though I would still say that different person or different firms might still have a different leverage or different edge, because it does actually require tons of research capability and investment for sure. But it do actually does offer a lot of opportunity for the investment professional to look into the data easily. Taking the mobility data, for example, like offered by Google and Apple, if we actually want to see we try to estimate the revenue for Apple computers, right? In the past, as what Rich just pointed out, we don't need analysts to really step into the Apple store anymore. We can actually try to estimate the revenue from two main streams. One is online, while the other is offline, right? Online, we have we can utilize two sources of data. I think that is a very standard way. It's already publicly available way. One is to look at the traffic, website traffic, while the other is look at online transactions, right? If we can know how much transaction has actually happened just for people to purchase the goods from Apple Store, then we can actually get the revenue stream from online. And simultaneously for the offline, we also have comparables. One is people utilizing the GPS data to get what might be the traffic for people to visit the Apple stores. And second is still using the points of data or credit card transaction data to look into the potential sale to potential purchase for Apple goods, right? This are a lot of very standard way or already widely known methods in financial industry as well.
But can you get it on that granular level, though? I mean, we can look at retail traffic, foot traffic, and we can look at online purchases or card purchases in the aggregate of a country, possibly in state within the United States. But what does that say on any more granular level in terms of we're trying to get to here whether Apple is going to have a good year? Can we actually look at Apple specifically, or is it going to be retail generally?
Yes, to certain extent. So and sometimes it might be just stay in a gray area is whether having a granular data just specific to the Apple purchase. That's actually still in debate so far. But from the data source provider right now perspective, that we means the public can actually have the access to the granular data just specifically related to the Apple sale. Another great interesting thing that sometimes might be easier for instance, if we want to actually estimate the sale for Walgreens or CVS, it's much easier than estimating the sales for a company like Apple, which not only have international footprint, but also have online and offline footprint, right? Walgreens, CVS, those are very domestically supplier, and their location are relatively fixed, right? Relatively fixed. So we can have a very good estimate for that. That's why we can see a lot of financial professionals, they don't even need to wait until the earnings report to really identify or maybe just get a great estimate about the potential revenue or the sales of those companies.
There's one question I would ask Tony on this, and you bring up a lot of great points, is that one of the bigger trends right now is we're seeing with the technology platforms being brought into Washington, D.C. is the data privacy and who owns the data and how and who's going to be able to access this. And so right now, I think there's a little bit more uncertainty around that, in the sense that I know that a lot of the data sets you're talking about are anonymized data sets. And so there isn't, there is not, maybe not necessarily a strict privacy concern, but to the, as Lotta's point is, like, to the extent that companies or firms are able to predict or get access to data that really maps closely to Walgreens or Apple, et cetera, do the companies themselves own that data? And how could that change the landscape in terms of a move towards who actually owns this data?
Rich, I think you definitely asked great questions. To answer that, I probably might try to break this question into maybe two minor steps. One step is whether the privacy issue will really actually preclude the company from accessing the data or from the hedge funds money manager to have gained access to this kind of alternative data at all. Recently, SEC actually has started investigating into some of alternative data provider, which actually does provide the granular data to the financial industry or financial community. So that's sometimes they actually try to aggregate it. For instance, the data that I just mentioned, the points of sale data, the credit data, or the liability data of each individual consumers, and tie them up together. Sometimes they wrap up by either zip code or by the state or the city or location where they actually stay, or even by the demographic layers those kind of a consumer actually belongs to, and then package them together and then just sell it. So the sales of those kind of data, well, to a certain extent, might infringe the privacy of the consumer, who actually generate those kind of data, right? That's actually a great point. SEC has taken a lot of a step to look into those kind of things, which actually has pushed some of the alternative data provider to start to look into or actually hold back some of data that they provided, which might release or tie it to the privacy of each individual consumer. So we do see some kind of how should I say, the monitoring or more of surveillance of the data, alternative data provider. And from the other perspective is that from whether the financial industry will continue actually like to utilize those data, we definitely see different ways. Some of the hedge funds start to actually rely on more of publicly available information, hopefully not to infringing the privacy issue related to the individual consumer. So that might be, this is one way to go. And the other way to go is, do we actually need to really provide some of financial incentives for the data providers, such as each individual consumers, right, who actually might like to share some of their privacy just to exchange for some financial incentive. So we do see two ways of going over there. However, even though this is still in change or in the process of changing, we still like to see, or we're trying to see more of the opening up for the alternative data to be utilized by the public domain, or even minorly, maybe some financial professional would still like to investigate more of alternative data. So those are two aspects right now are undergoing. We will definitely can discuss more of those two aspects once we see a clear picture over there, maybe over time.
Well, and to the point that you make about individuals owning their data and maybe allowing individuals to sell some of their data, I think that's been the kind of the holy grail in terms of these micro payments for data for some time. But it's one of those things where, and this is probably for another podcast, but that's one of those where things such as blockchain and decentralization of finance really open up the idea of micro payments from consumers to companies, et cetera, and really, or vice versa, and really open up that possibility and create what you're talking about. But as we know, markets are always ahead of regulators, and markets are always going to push into that gray area because there's money involved.
Yeah, Rich, now you open another big area for discussion, definitely, about the blockchain and DeFi related to the privacy, right? Apparently, the strong argument for the DeFi and blockchain is that people who share the data actually own the privacy, and should actually share the value of the data by themselves, not just by some dominated players, such as a lot of people have complained that Facebook and Google, those kind of big tech company, actually own the data for individual person, but the individual person don't actually share the value that created or brought up by their privacy. Now is the DeFi, NFT, that we do see some strong argument over there. Policymakers, including the regulatory agency, are actually looking into that. That's why they don't kill the NFT, or they don't kill the metaverse right at this beginning. They will still like to keep their mind open and start to open more of like public hearing, right? Even Congress will still like to hear. I think this is a right attitude to promote the innovation while simultaneously trying to protecting the privacy issue for the individual citizens.
So I'd like to also see if you can provide, both of you, ideas for our listeners here who might be more bottom up, might be thinking about macro, how to be smart about applying this. So yes, I want to be using alternative data. I know there are such data out there that we mentioned. Everybody knows about the mobility things and things like that. So what's the mental framework in terms of, one, should I start bottom up with what question and then trying to find what alternative macro data out there? Or should we start with the data source and focus on trying to find something that is a little bit more different that others are not using, and then try to figure out what answers I can get from that? And related to that, right, is also, how do I find data that are not something that people are using already? How can I just kind of have a framework in my mind of searching for and finding both the applications that are different from what others are doing, as well as the data itself being different from what others are using today?
I'll go first if you don't mind. I'll give you a much more vanilla answer to that, and then Tony can give you a much more intelligent answer to that. But what I would suggest, and it's one of the things that I know I've used, one of the things I talk to my students about using, is we're used to building a 3-statement model, whether that's analyzing equities or analyzing individual credits or whatever it is. And one of the things that we're trying to do is we're trying to forecast revenues and margins. And so what can you do with alternative data? What can you do with machine learning and AI, et cetera? Well, forget about the machine learning and AI. Why not look at, if you're trying to forecast revenues, build a regression that says as revenues as the dependent variable, and looking at all of these different macro variables that we're talking about, whether it be mobility or reservations or any sort of NLP technology, and see how much influence those independent variables that you're talking about, the macro variables, really do influence the revenue line. Now, for some industries, it may not matter, but for a lot of industries, there's way more cyclicality than I think a lot of us are used to thinking about. And so that's a way where we can really pull the macro directly into our 3-statement, our micro models, our idiosyncratic models, and see what the influence is. It won't explain everything, but it'll explain it's a lot more than people really think it does. And I think it's a way to kind of tie the two together, and you can do that with simple regression techniques. You don't need machine learning and AI to do so, and you can be just a little bit smarter than everyone else that does what you do for a living.
Yes, I like what Rich has just framed about the framework for utilizing the alternative data. Definitely, that's a great way of usage. And from more of a CFA, I think, charter holder perspective, traditionally, there are 2 ways of doing analysis. One way is to conduct the top-down analysis, which is from the macro to the micro, right? The second way, apparently, is just reverse or inverse, just to bottom up, trying to conduct the analysis from each individual component, such as the revenue components, and then trying to get aggregate information to predict what revenue could be for each individual company, as what Rich actually just mentioned, right? So from top down to bottom up, there are actually there are actually 2 main framework of utilizing the alternative data. I'll try to maybe share some of my insights based on my research at this school. For instance, from macro, the top-down approach. From top-down approach, typically the financial professional would like to actually search for some semantics or the major secular change or secular trend for the economy. Now, actually, macro data or the alternative data will become extremely useful. For instance, the mobility data, which is trying to determine, for instance, the stay-at-home industry or stay-at-home company might benefit from the change or not, from the COVID, or stay there or not, right? So that's one way, is trying to make a determination what might be the secular trend, and to determine whether some kind of a theme or semantic shift within the society are really happening. Now, here, from now on, at the end of year 2021, are we going to stay longer due to the new variant, COVID variant, Omicron, right? As what we discussed last time. So this is actually macro data or mobility data from this point of view can share some of indication. Now, once we actually determine the theme and semantic, the next step will be to actually identify what kind of a industry or company actually might benefit from the secular trend or demographic change. Some of the natural language processing do actually provide a lot of insight. For instance, we can analyze the index or the search keyword, search index from the Google search chain, Google Analytics, to determine which company are actually tied to those particular secular chain. Now, taking Peloton as one great example, right? Since the beginning of last year, if people stay at home, they might exercise more at home. And Peloton, do a lot of people actually trying to purchase the equipment from the Peloton? So if you look at the Google chain, and you're going to find it very interesting things that the search index or search heat index for the Peloton actually match the price movement of the Peloton closely, even without utilizing any machine learning or advanced natural language processing technique. People can visualize. So this kind of a high correlations over there. Rich just pointed a great way. We can just use a very simple linear regression. We can get insights, right? You don't need to be a super computer genius to identify this kind of thing. So that's from one way of looking at the top down. Now, if we look in the other way is bottom up, like it's also a great thing. If we want to really determine which company might have higher transaction, which actually is typically leading to high revenue or higher sales, if we can get access to certain kind of point of POS data, transaction data, so we can actually separate it and make a decision or maybe some kind of smarter decision based on the data available, which company actually are gaining the revenue momentum. And based on kind of information aggregate together, then we can actually start to predict the revenue, predict the EPS, earning per share for each individual company, likewise by the traditional CFA charter holder, right? That's one way of going from the bottom up. So from either way, I think the participants will be able to identify the alternative data that they like, and they will find it extremely useful.
Before we wrap up, though, I want to get back to the question then about how about the finding of the data? You both covered ways to apply data when you have it. How can a person who listens to this be smart about finding the data that we don't know about, right? We can't tell them, well, look over here, because then per definition it's already known. So, and now everybody knows to listen to this. So just in terms of like, how do you try to be one step ahead of others when it comes to data? How do you find your own data that others are not using and therefore should not be in the price? If you could both touch on that quickly before we wrap up.
I would say if you don't know where to look, then you're probably not going to have a first mover advantage regardless. And so I wouldn't really worry about it. But I think you can still have a first mover, like I said, if you are using slightly more sophisticated techniques than what a lot of your peers are doing. But I think there are people who devote their entire life to finding those data sets before others. And unless you do that for a living, it's going to be hard to say that you have first mover. For bigger investment firms, they're buying a lot of this data, and so their analysts are going to have access to this data.
Okay, last word.
Definitely agree with Rich. Would just say that if you don't know where to look for, sometimes basically saying that most likely that you won't benefit too much from using the alternative data. One smarter way sometimes might be just start from your neighbors or from your surrounding, like trying to check if actually a lot of people surrounding you are talking about certain things. Maybe that could be the starting point. For instance, like when we actually start to see the Omicron, then we are going to see a lot of people posting the articles or posting the threads on their social media, right? Including the Facebook, Instagram. Now, with that as a starting point, that sometimes people might talking about a few of the keywords related to Omicron. For instance, if Pfizer's vaccines are still useful. Now, if people are talking about the Pfizer, one thing that people would really like to look up is, can I actually identify source of data related to the vaccine effectiveness. If I can, I have certain access to some kind of a data that people don't, that might provide some kind of edge to the usage of the alternative data. I think that's just one of very simple example. Another simple example people would like to watch might be the liability, or maybe the balance on their credit cards, right? As what we know, like most of people live on their credit card. Now, if to talk about the credit card, right, people might feel the impact without having the stimulus from provided by the government upon the reopening policy. Now, if they can actually have become more of sensitive to the credit card balance, they might start to look for, are there any actually source out there provided maybe some kind of aggregated or granular data from the credit card spending or credit card balance. That will be also very useful. As far as I know, some of my colleagues at Geese of School, actually, they have started heavily over to the credit card balance by utilizing this kind of alternative data, and have published the discovery out there. I think this is some of the great example of maybe coming up with the idea of looking for alternative data. But overall, I think the alternative data are just so much. There are a lot of things that we could possibly discuss from industry perspective or from the company perspective.
Thank you so much. And with that, I hope that you learn more about what alternative data is, how to apply it. Remember, it's all about the application. That's where you can be really smart. There are gobs of ways, right, of looking at this in different ways. So still probably only scratch the surface on what we can do with this. It always feels like everything has been done, whatever you look at, but there's so many opportunities out there. And this is certainly a field where there's a lot of confluence of technologies, and smart people coming together can do a lot with this and be smarter about investments and macro insights. So with that, thank you so much for joining me this week, and Merry Christmas to you.
Thanks, Lotta. Happy holidays.
And Merry Christmas.